Before we begin, I'd like to state that this event, including any materials provided, is for informational purposes only. The opinions expressed are those of the presenters. They do not reflect the opinions or views of Community America Credit Union.
Good afternoon, or morning, or whenever you're watching this, and welcome back to the Life Skills webinar series hosted for and by KCPS students. Thank you for taking a little time out of your busy schedule to watch this. We really appreciate it. My name is Sydney Richardson, and I go to Lincoln College Prep, and I'll be one of your hosts today, along with these other amazing students.
Hey, I'm Daisha, and I'm a senior from Purcell Academy in Arts.
Hi, I'm Zoe. I'm a junior at Lincoln College Prep.
Hi, I'm Maria, and I'm a junior at Northeast High School. One of the reasons why we're doing a money series is because in a poll done by Community America, 80% of the respondents across race, gender, income, and every other metric said that when they think about money, they are stressed. Money shouldn't be stressful, it should be an opportunity. Today, we have two amazing guests from Community America to talk to us a little bit about money, which can sometimes be tough and confusing subject. Jamal Evans, a branch manager, will walk us through banking basics, including budgeting, savings strategies, and common money mistakes young adults make. And Liz Lewis will help us understand the importance of establishing and building good credit early on. Jamal, will you start us out by explaining what credit union is?
Hi, my name is Jamal, and I am a branch manager here at Community America at our Shawnee location. And just the basics on what a credit union is. A credit union is similar to a bank. We have the same products and services and convenience that most major banks has, with the one exception, when you're a member here at the credit union, you're part owner. So whatever profits we make here at the credit union, it goes back to you as a member. We are a not-for-profit agency, and all of our board of directors are volunteers who are elected by our members.
Thanks, Jamal. So, I babysit and put half the money I make into a checking account for savings, and I use the rest for regular pocket money to spend on everyday things. Do you think that's a good system for saving and spending?
Yeah, so it's always a good, important to save money. So having a good system in place helps and holds you accountable. I would suggest establishing a savings account along with your checking account. The money you want to save should go into the savings account. That way you don't be tempted to use your funds if they're all in checking. So by separating the funds, you won't deplete the money that you're actually saving for a purpose. So I would recommend always creating a savings account for that purpose.
Those are some great tips and pieces of advice. One thing I find myself doing a lot is spending too much money on small things and things that I don't really need, and they really add up. Do you have any tips on how to avoid this?
Yeah, in order to help yourself from spending money on non-essential items, you must first ask yourself, is this purchase a need or a want? So once you establish that, hey, this new pair of shoes is something that I actually need, or is it something I actually want? Once you think about it and you realize, hey, I already have a pair of shoes I bought a couple of months ago, I don't need these, you won't be tempted to go ahead and spend the money that you have saved for a reason. You have to be willing to distinguish a difference, like I said, in these two items. You need to make the purchase, do it. If you don't, just don't do it. A good way to go about this as well is, we talked about the savings account and putting money aside in your savings. If you put yourself on a budget and allow yourself, say, $40 that week for spending, you won't be tempted to actually go and transfer money from your savings account to your checking account. So the money that's in your checking account is set aside to buy the essential items you need that week.
Do you have any other suggestions on how students can improve their money habits?
Yeah, here at Community America, there are a lot of cool things that we do here. One of the most coolest thing that I think most young people should use is our online banking or our mobile banking. This allows you to check your account regularly so you won't go over budget for the funds you have in your checking account. If you were to go ahead and take advantage of the online banking and utilize it, you can set up text alerts or email alerts. So it will alert you when your account falls below a certain balance. So for example, if you set your alert to send you a text or an email if your account falls below $25, it will send you that message. That way you know you can log in and stay on track and look at your spending. Another good way to keep track of your spending is utilizing that online banking. Like I said, the mobile text alert. It can also talk to you or give you alerts if your account has a withdrawal or a transaction that's uncommon to you. So, for example, if a $50 transaction cleared your account and you weren't sure of what it was, you can log onto your banking right away and see what that transaction was. It's always important to keep your account secure too. So don't share your information with anyone. So keep your login credentials, confidential. You don't want to put that information out there and have someone access your account. So that's very important. Also, if you are employed, when your company offers direct deposit, have a portion of that direct deposit go into your savings account, so you don't have to be concerned about, oh, I have to log in and transfer some of that money to my savings account that already is designated for savings. So your employer will go ahead and send a direct deposit over and have some go to savings and some go to checking.
Those are some good tips. I remember when I started working, my dad had told me to put 10% of my check into savings. And if, for example, I had $345 in my check, that the 300 save it and then stretch the $45 into the next paycheck. Is this a good way to save money, or is there a better strategy?
You know what? I mean, your dad is, he's right. You have to save money. That's, most people recommend putting 10% of your paycheck into savings account. But if you are at a place where you can put more, I recommend putting more. And another thing I wanted to go back to with Zoe's question is also setting up an emergency savings account. That's also a great way to save money, because sometimes there are emergencies that pop up and you need to make a purchase or something along those lines. If you have an emergency savings account set up, you can just go ahead and borrow money from that emergency account. So getting back to your question. So yes, your dad is right. You should save some money. If you created a budget, you can go ahead and make that $45 last you. Most people know what they have coming up each week in terms of payments. So if you have bills that are like a cell phone bill or something along those lines, or you're helping with your car insurance, you know what's coming up, so you know how to budget that money. So for the most part, if you stick to your budget, $45 or $50 a week should last you. There are a lot of things that a person can do in terms of helping to save money. I know a lot of young people love to hang out with friends on the weekends and go to go to dinner or go to the mall or something along those lines. It can be tempting when you do stuff like that, but always try to find activities with your friends that you can do for free. That way you don't have to be tempted to spend your money that you have budgeted. And if you do actually go over your budget that week of $45 or $50, make sure to pay yourself back the next time you get paid. That way you will stay on track with your savings account's goal.
Thanks, Jamal, for all this great information. For those of you watching, we'll provide a checklist after the session that helps provide a baseline of financial milestones for high school and college students. It includes a lot of the content we have discussed here.
Well, I'll be sure to put these budgeting and saving strategy tips and advice into use. Now, once you got your budget down and are really adept at sticking to it, you may want to start building your credit. Now, you may be asking, what is credit? Here to give us juicy details is Liz Lewis.
Hi, I'm Liz Lewis with Community America Credit Union, and I have been in banking for about 20 years and am the mom of 3 kids, one as a senior in college and then 2 in high school. And I'm really excited to be here today and share a little bit about what I've learned on how to help young adults build their credit. So thanks for having me today.
Thanks for being here, Liz. I know I certainly would like to know some more about credit, so I have a very basic question. Can you explain to us what is credit and what you can do with it?
Sure. When people say credit, what they're usually talking about is the credit score. So when you hear people say, do I have good credit? Do I not have good credit? What they're really talking about is the credit score. And what a credit score is companies that are going to loan you money or qualify you to rent an apartment. They look at that score to see how reliable you are to pay back money that you owe and how likely you are to pay it back on time. So that's what you hear about the FICO score, and you can check your FICO score. It ranges from 300 to 850. With the higher the score is, the better. So companies use that to be able to see if you're going to pay them back or not. One of the things that a lot of people want to know is what makes up the credit score. How do I know? It seems to be kind of like this mystery. But what makes up your credit score are things like credit cards, student loans, auto loans, rent, utilities, and over 60% of your score is just paying your bills on time and keeping your balances low. So if you pay your bills on time, you're going to have a good credit score. If you are late paying your bills or you forget to pay your bills, you're going to have a very low credit score. So that's just when people ask about what is credit, it's how likely you are to pay back your bills on time and do that consistently.
Thank you so much. So, of course, as you mentioned, the first thing I think of when you say credit is credit cards. And of course, at 16, I don't have a credit card yet. So, do you have any experience with credit cards, Daisha?
Once I turned 18, I got my own credit card. Thanks to my older sister who told me now is a good time to start building my credit. Liz, what are your thoughts? Is now a good time to get a credit card and start building my credit?
Yeah, absolutely. 18 is the perfect time to start really focusing on building your credit. That is when you are considered an adult and able to handle your own financial responsibilities legally. So it's a perfect time. Credit cards are a great way to do that, to build up your credit. And the beauty of doing it at 18 is you're starting to get some history. And so when you are ready to live on your own, whether that's when you go away to school or you go and move out of your parents' house and you find your own place to live, you'll have the credit score that'll say to the landlords that you're going to pay your rent, that's going to tell the car dealership that you're going to pay for your car. So starting at 18 with a credit card is a great way to pay your bills every single time. So when you start doing those bigger things later on, you'll already have that credibility on your FICO score in your name. When you do get a credit card, you will likely need a co-signer until you are 21. So that's just something to keep in mind.
Thank you for that information. So I know that I am a little young, I'm 16, but I really would like to start building my credit now, especially because I think I'm responsible enough to handle it. So should I become an authorized user on my mother's credit account or should I just wait?
So that really depends. So when you are 18 and you sign up for a credit card like Daisha did, she is the borrower and then the parent's the co-signer. When you're an authorized user, you have no responsibility at all for that credit card. You're just able to use it. And so some places will report that to help your credit and some places won't. So it's just best to call the bank that your parent has their credit card with and say, do you report authorized users to help them build up their credit? And they'll know exactly what you're looking to do and they'll tell you if they do that or not. The other thing that you could consider is your parent opening up a very specific credit card where you're the authorized signer where they know that it reports, so it's not on their normal card. So authorized users can help build up your credit, but it's always a great idea just to call the bank and make sure that it'll work the way that you hope it works.
So we all would like to know the difference between a secured credit card and an unsecured credit card.
Sure. So a secured credit card, both are really great options when you turn 18. So, but a secured credit card, you are putting money down as a refundable security deposit. So if you put down $500, then you have a $500 credit line on that card. But one thing that's really important to know is it's not like a prepaid card where you can add more money to it and then spend it and add more money to it and spend it. That's kind of what you think of when you think of a prepaid card. This one will take that $500 and it'll just kind of hold it over off to the side. And then if you spend $100, you still have to pay back that $100. It doesn't come out of that 500. So that 500 is held aside in case you ever don't pay anything back. And if you don't pay it back, it's going to hurt your credit still. So that's how they kind of work that piece. So it is good. It's something that you can typically do without a cosigner when you turn 18. So if you had $500 to put down for a secured credit card, they will slowly over time be, increasing your limit and then eventually removing that security deposit, maybe when you're 21. So that's a really great option, but I think it's important that people understand it doesn't work like a prepaid card. An unsecured credit card is what you think of as your traditional card. It's likely what your parents have. And when you are a young adult, 18 to 21, you'll typically get approved for a small line, $500 to $1,000. You'll probably need a cosigner to begin with. And then you can spend up to that credit line, but they're not keeping a security deposit on hand. On store cards, those are specifically related to the store. I would always recommend contacting your credit union or your bank for your first credit card and to not open a store card. Store cards charge twice as much usually as your bank will charge, and they don't have a relationship with you. You wouldn't be able to manage it through your online banking. The 20% or whatever sign up discount you get for signing up is usually not worth the extra money that you're going to be paying in an interest rate and fees. And it's super important that your first card be something that you can manage in online banking so you can just pay for it super easy out of your bank account. So no store cards.
I'll remember that. Also, where are the do's and don'ts when using my credit card as a young adult?
Yeah, so the big thing for a do is always pay at least the minimum. I'm going to say do pay more than the minimum. I believe that you should pay your balance in full every single month. But if you can't pay it in full, you must pay at least the minimum. Because again, when we talked earlier, 60% of your score is made up on if you're paying your bill on time. So pay the minimum, pay more. If you can pay more, that would be the number one do. Do make a budget and a savings plan, as Jamal talked about, to have your emergency savings. Where we see people usually get in trouble with credit cards is not because they spent on things that they didn't need. It's because they didn't have an emergency savings set up for something like a car repair. So now all of a sudden they need $300 to fix their car or to do something like that, and they have to put it on a credit card where they're going to pay, 15% interest on that, whereas typically you should be able to get that out of your emergency savings. And then that interest, then you end up just revolving that balance for a long period of time. So do definitely get a good emergency savings built up before you start using a credit card. Do check your accounts once a week. Make sure it's hooked up to your online banking. Treat it like you would your checking account. Look at it all the time so you don't lose track of your spending. My recommendation with my son who's in college is just to use it once or twice a month on something small like his gas or his groceries so he can pay it off in full every single month. Don't use it on food, like going out food or Starbucks or things like that. Use your debit card for that. And don't spend up to your credit limit. So if you have a $500 credit limit, don't put more than $50 a month on it. And that's a good rule of thumb, because the higher you get to your credit limit, the more it looks like to lenders that you're going to not pay them back. So you want to keep that percentage that you're using on the low side. And just don't pay late. That's the biggest thing. And don't open store cards. So.
Thanks, Liz. That is some incredibly helpful information. So now some of us feel like we're not ready to get a credit card yet. So are there any other ways at our age for building up credit?
Yeah, I mean, I think one of the things is just to remember it's not always about credit cards. I think that's the first place that we look at, but pretty much anywhere that you are signing on to borrow money is ways to build your credit. So if you're paying rent in an apartment, your utilities, things like that, paying those on time will help. Student loans will also be reported to your credit. Auto loans will be reported to your credit. So credit card is usually the easiest thing and the one that we think of first. But throughout your life, pretty much anytime that you are borrowing or owe somebody money for something, a company money, it can impact your credit.
I like to first say that my sister also gave advice to use my credit card to pay for gas, staying at the low end.
Yep.
So that's another great tip that you gave.
That is a great advice.
Also, you talked a little bit about loans. I know many of us are heading off to college soon. So what should we look for in student loans, and how will this affect our credit in the future?
So that's a really great question. And I know it's something that's on everybody's mind, their junior and senior years of high school. And definitely when you're looking for a student loan, you want to understand what the interest they're going to charge you. So what you're going to be paying to borrow that money. You want to know when you're going to have to pay it back. Does it start while you're still in school, after school? What does that look like? And I know that there's a session next week where we go into a lot of detail on that. So I'd encourage everybody to participate in the session next week, because we'll have an expert on there that really knows all about the student loans, because it's complicated. As a mom to a college kid, it was complicated for us, and I've been in banking for a long time. So I think the session next week will provide some insight to that. But again, that'll be another loan. So as long as you're paying the minimum, at the very, very least, pay the minimum and don't be late, it should help with your credit.
Thank you so much. So finally, I know we talked about how to build up a credit score, but what if you make a few mistakes, like if you miss a payment or you can't even pay the minimum back on your loan? So where do you go from there?
Yeah, so everybody makes mistakes. So just always know that mistakes are not permanent. They're always temporary, right? So the sooner you get in front of your mistake to kind of own it and fix it, the quicker it's going to go away. So the first thing I would say is you just call your bank, you call your credit union, you come in and see us, and you just say, look, I was late making my payment, or I forgot to make it and it was due yesterday. And most of the time, we're going to say, great, no problem. We get it this one time. That's great. But you need to call us. Otherwise we won't know. And so you just call your bank and let them know that you made a mistake. And if you get into a point where you can't pay at all, call us. Call your bank, let them know, hey, I am having trouble paying this month. Is there something that you can do for me? Many times they'll have a program where they'll let you skip a payment for a month without impacting your credit score. But again, unless you call and tell them and work out a plan with them, it will negatively impact your score. If you call them in advance, if you have the conversation with them, chances are they'll work with you on it and help you. So always own it and call it early. If you ignore it, it'll snowball on you.
Thanks. I didn't know credit unions were that nice. You always see like movies and stuff where they're like calling up and, it's just a big deal. But I really appreciate that that you work with your customers. So I know coming from all the students, I know that we have learned so much today. So I really appreciate it. So thank you guys to everybody who watched today's Life Skills session on money. I think it's very important to start learning about money at an early age so you don't have to worry about it later and you have everything all figured out. So learning is the first step to this, and it's great that you're really taking some initiative to develop your skills. So remember, if you need any help, go ask your parents, go ask your adults. They've been in this situation before. And of course, there are lots of resources out there on the internet. And please tune in to next week's webinar about success. And remember to complete your exit ticket to keep working towards that $25. We love to hear feedback. So thanks for being here and see you next time.